From our Scottsdale studios, this is Retirement News Online. As a pre-retiree, locking in steady, reliable growth is more important than ever these days. Fixed indexed annuities, or FIAs, offer principal protection with the opportunity to earn interest linked to market performance. But what many don't realize is how much interest rates influence the terms and potential growth of these products. And asking the right questions now can help you secure better options for your retirement income strategy. And joining me today is my guest, Carlos Rojas with Rojas Retirement Solutions in Visalia, California. Carlos, welcome.
Thank you.
I just talked about interest rates. So interest rates are high. Usually a bad time, obviously to refinance your home, buy anything or finance anything. But in the other way, you can kind of refinance your retirement. Can you talk about how interest rates help you do that?
Yes, well, interesting point you bring up. People do tend to shy away from investment opportunities when we have a high interest rate environment. But when you look at the insurance industry, specifically annuities, when you have high interest rates, there are opportunities for higher caps, higher rate opportunities within these options, giving the client an opportunity to earn more money as they invest.
And so, these products, they perform really well regardless of interest rates, but this is kind of a Goldilocks zone, a window of opportunity while we're seeing high interest rates, and it doesn't look like they're going back down anytime soon. It's an opportunity that you might want to consider. So as they rise and fall, how does that influence caps and some of the income features of an annuity?
Great question. So as rates rise, the client has the opportunity to lock in the contracts or these annuities at the highest rate possible, giving the client an opportunity to get, in some cases, a higher participation rate, which at times acts as a multiplier. So if an index fund returns a certain percentage, the client can sometimes make double to triple times that return. And same goes on the inverse side. So rates drop. These companies are now many times forced to lower their rates, lower caps, lower participation rates. Therefore, the client might not have the opportunity to earn as much income as you would in a high interest environment.
But the good thing is, you can look at this kind of a product, for example, as an alternative investment, which is traditionally something that's not correlated with the market. This is only correlated with the growth of the market. So in any case, you're not losing money.
Correct.
You're putting it into something that potentially, if you need for income, it can make sure that you have income for the rest of your life and in a sense, create your own pension. So how does this kind of a strategy, a fixed indexed annuity, compare to other, fixed income or growth solutions like bonds?
That's a great question. So bonds and CDs specifically at the bank will give you most of the time a fixed rate. With an index annuity, again, you have more of that flexibility to earn a higher rate of return. And moreover, with CDs and bonds have more of a tax liability at the end of the year. With an annuity, most of these are tax deferred, so giving that client a higher participation to not just lock in those rates, but have a steady growth as they retire and as they build that saving and that nest egg.
Yeah, it sounds very, very interesting. So for the last question here, if somebody is watching this and thinking about, man, that sounds like something that I might be interested in, what kinds of questions or what kind of considerations need to be made to make sure it's a good fit for them?
I think age is a big factor, a significant question. Most of the time people are not at the age of retirement, maybe under 59 and a half. So there are those opportunities for a client to potentially roll over their 401k at a certain age. Many times too, a client might have a better opportunity investing their money elsewhere if they're a little younger. So I think age is a critical question.
Yeah, and probably when you need the money.
Yes.
Carlos, thank you so much. We appreciate your time.
Thank you.
He is Carlos Rojas with Rojas Retirement Solutions in Visalia, California. And this is Retirement News Online. Thanks for watching.